Good evening, you're watching Global Business Report with me, Siddhartha Dubey, in Mumbai. Less than 2 hours ago, Microsoft and Yahoo announced an online search and advertising partnership designed to take on arch-rival Google. The 10-year deal will focus on sharing revenue between the two companies, but it stops short of combining their display advertising businesses. In a joint statement, the company said the deal will boost Yahoo's annual operating income by about $500 million and yield capital expenditure savings of $200 million. Some sort of partnership has been in the works. Remember, Microsoft and Yahoo have been talking about cooperating in the online advertising market, which is dominated, of course, by Google. Microsoft tried to buy Yahoo last year, but its $47.5 billion bid was sent back. Plus, Yahoo's attempt to seal the search advertising deal with Google fell apart under regulatory scrutiny. Under this new deal, though, Microsoft's new Bing search engine will power Yahoo searches, while Yahoo will handle the advertising sales using Microsoft technology. Now, so is this enough to take on Google's might? After all, it does have 65% market share when it comes to internet searches in the United States. Let's ask Mark Pardo, U.S. market strategist at Cantor Fitzgerald, who's joining us on the phone from New York. Mark, great to have you on the show. Many thanks for taking time out. Wanted to start with the mechanics of the deal. Where's the synergy here?
Well, Microsoft has been trying to get Yahoo on board for quite some time. I think the real disappointment here is that it wasn't a straight-up takeover, so that they could fully integrate the company. As you said, there are synergies here with Yahoo taking on the advertising aspect, something that Microsoft has truly lacked in their attempts at a search engine. So while the driving force remains Bing and remains the Microsoft software, it's really Yahoo taking the advertising side, and that is where they are stronger than Microsoft.
Mark, do you think this is enough to basically make a dent on Google?
It will probably help take away some market share, but it's not going to make a significant dent. I think that Bing still has a long way to go to make any kind of marketable attack on Google's search engine. Google really still the leader in the area, and this will help because of the advertising. It will generate more revenue for both firms, Microsoft and Yahoo. But in terms of eyeballs and the numbers of people, it's still a long road.
That's just it. I mean, I just wondered if you can give us a reality check of the status of the industry. Are these companies making lots of money at all?
Well, when you say lots of money, it's kind of subjective. I think that they're seeing revenues obviously have been declining through this recession, and advertising prices have fallen across all medians. So it's going to be a difficult business to be in, but it is still a very profitable business in that, it is strictly advertising over the internet. There isn't a whole lot of cost to it. It's all about getting eyeballs, and I think Microsoft is going to make a powerful attempt once they get everything integrated to try to bring more eyeballs to the screen and see if they can steal some market share away from Google.
What about any antitrust issues here? What do regulators say about the combination Microsoft and Yahoo? Does it raise any red flags in the United States, even Europe perhaps?
I don't think that it's going to, they'll certainly look into it, but I don't think it will do anything because Google has the larger market share anyway, that the combination of the smaller players is not going to overtake Google's business and be a real threat, a monopoly threat. So I don't think that we'll see a regulatory problem for this. And remember, this is not a straight-up takeover. This is just a deal between the two, a 10-year pact on utilizing the search engine. That's why Yahoo stock is probably down. A lot of people played this looking for a takeover. Plus, Microsoft didn't have to pay an upfront fee. So they're not paying any upfront money, and that's why Microsoft stock is doing better today.
And I guess it's a bit too early to talk about any reaction from the folks at Google, eh?
Yeah, we probably won't hear too much from them specifically. I think, as is always the case when you're in the stronger position, you're not going to comment on the weaker player making a run at you. So I think that you're going to look at anything out of Google as that this won't make much of a difference to their business.
Mark, really appreciate your time this afternoon on the show. Thank you so much for joining us. Mark Pardo, Cantor Fitzgerald in New York. Let's stay in New York and cross to the Reuters newsroom, where we're talking with Reuters correspondent Diane King. Diane, all eyes, of course, Yahoo, Microsoft. We were just talking with Mark about that. How are the stocks doing this morning, and what does the market really have to say about this partnership?
Hi, Sid. Well, what we're looking at in terms of the market reaction to the Microsoft-Yahoo deal here, we're seeing Yahoo shares under some pressure, down about 7.4%. On the flip side, you have Microsoft shares pushing higher. Analysts do see this as a little bit of a knee-jerk reaction in the deal because there wasn't a cash upfront payment. So what we're seeing is some sell-off because of that initial knee-jerk reaction, but we'll have to see if that plays out through the rest of the trading day. As we know, Yahoo's saying it is a boost for their operating income. This deal, it would boost their income by about $500 million. So it looks like a strong move according to a lot of analysts, but right now there is a knee-jerk reaction in terms of some selling pressure on Yahoo.
Absolutely, and the Dow right now, 9,037 points, couple of minutes into trade. Dan, 5% drop in Chinese stocks today. Any noticeable effect or sentiment swing on Wall Street?
Well, the sell-off in Chinese stocks initially did rattle investors, and you saw futures drop under some pressure ahead of the market open. Now, there are some other factors at play in terms of the direction of the markets, but where we did see the effect was on crude oil, on commodities. We saw crude oil trade, it's still trading down about 2.5% because of that sell-off in Chinese stocks. On the flip side, you had the U.S. dollar gaining, recovering some of its recent losses due to that sell-off in Chinese stock markets.
Dan, very quickly, earnings out today or expected. What's on your radar?
That's right. I'll give you a quick run around. We have ConocoPhillips, that's the energy sector, one of those big energy giants. They're reporting $1.3 billion in Q2. Time Warner also came out with its results. Their profit did beat Wall Street estimates, but revenue came in lower. Visa is set to report higher earnings. Visa is actually an interesting case in terms of the financial sector. It's expected to do better because of consumers relying more and more on their debit cards, and the company has increased prices in this recession and cut back on some of its costs. So we'll keep a watch on that and see how those earnings fare.
Okay, Diane, always wonderful, always fun. Thank you.